Hi Miss Emily. Today I'll be filming at this place, right? Because behind me, right, there's a lot of greeneries, and apparently, right, trees and plants are good for your eyes. Since you are staring at the computer for so long, right? I think you should look at some greens. I'm so thoughtful. You should be thoughtful about my grades as well. So now, for this video, I'll be covering various aspects of digital banking in Singapore. Like, what is the big deal of digital banking? Why MAS want to issue digital banking licenses? What is the meaning of a sustainable digital banking model and its implication of not being sustainable? What about our competitor Hong Kong? Will we lose out? And lastly, what is value destructive competition and how harmful is that for our financial sector? Digital banking is a part of a broader context for the move to online banking, where banking services are delivered over the internet. The shift from traditional to digital banking has been gradual and remains ongoing today. Back in June 2019, MAS has announced that it will issue up to 5 digital banking licenses, including 2 digital full banking licenses, which allows the licensee to provide a full range of products and services and taking deposits from retail customers like you and me. And MAS will also issue up to 3 digital wholesale bank licenses, which allows the licensee to serve like SMEs and non-retail customers. So with these, MAS hopes that the banking sector in Singapore will remain and continue to stay resilient, competitive and vibrant, and hoping that this will eventually stimulate and enhance competition. I personally support MAS by issuing the digital banking licenses, as they will create more job opportunities, just like how we have to diversify our portfolio when we are investing, right? One also should diversify their skills, or else 你没有饭碗了. Then as digital banks, right, will somehow use one of the ABCD of technologies, namely artificial intelligence, blockchains, clouds and data. The issue of the license will also help to serve the unbankable and underbanked segment. So, according to MAS, a sustainable digital banking business model refers to digital bank having a vision towards profitability. So, by ensuring that they have a robust risk management in place, right, to ensure the digital bank is not taking too much risk. It also indicates that the digital bank are utilizing their customer interactions, products, processes, and data in the ecosystem. A sustainable digital bank will often provide an attractive user interface, in addition being digitally efficient and on the back end. By using digital technologies, it will cut down on overheads to serve their customers. Now, you may be wondering, why MAS so mafan wants a sustainable digital banking business model from the digital banks? The digital banks themselves will be able to solve issues in regards of lack of competition by primarily being appealing to the customers. So since they are sustainable, those practices will allow them to continue for further expansions and business growth in the long run. Let me give you an example. Let's say one day a digital bank reaches to a level of, let's say, DBS. Bearing in mind that the digital bank will be able to serve those who are underbanked, unlike those incumbent banks. The customers from incumbent banks might be open to try out new innovation, digital financial innovations that the bank allow them to do so that they can have an easier life to carry out day-to-day banking activities with just a few taps away. Some people may say that the rise of digital banks may lead to traditional banks being obsolete, but personally I don't think so. In my point of view, the rising of digital banks will help the incumbent banks to stay competitive in the banking industry and retain their market dominance. In my opinion, traditional banks won't die so easily. There's a saying in Chinese, 姜还是老的辣, and direct translate saying that older ginger is hotter and spicier than those young ginger. So my point is simply trying to say that experience counts. Traditional banks can provide their experience to the FinTech companies, and FinTech companies can provide their technologies to the traditional banks. Thus, working together is also a way to move forward in the Bank 4.0 era and prosper together. So what are some of the possible implications if the bank that were previously issued the license are not sustainable? This will be a potential moral hazard for MAS, So the digital banks might not have the capability to manage competition, as they will have they will be lacking behind without any plans of where they are heading to. And without a plan or vision, they might fail their business, and they can potentially cause public distrust. So with the issuance of digital banking licenses now, the competition in the financial service industry between Singapore and Hong Kong will definitely increase. It is reported that Hong Kong will issue up to 8 digital banking licenses, and Singapore will issue up to 5 digital banking licenses. So both Hong Kong and Singapore similarly have similar entry requirements for digital banking licenses. The slight difference is the barrier of entry, where Singapore only requires a minimum paid up and the entry level of paid up capital of $15 million and progressively to $1.5 billion Sing dollars to become a functioning digital full bank. For Hong Kong, on the other hand, the entry requirement paid up capital is actually $300 million Hong Kong dollar, and that's 3 times more than what Singapore Central Bank MAS requires. So although Singapore and Hong Kong are comparable in many areas, each has its own strengths and weaknesses. As a multilingual state using English as its lingua franca to go along with strong Mandarin, Singapore holds a clear communication advantage over Hong Kong, which the primary language is Cantonese. According to a study conducted by Dell, Singapore is the world's 3rd most innovative and future-ready economy due to its ability to facilitate people and organizations to drive change, provide quality infrastructure, and promote innovation, growth, and profitability. In contrast, Hong Kong is ranked at 25th in this survey. Wow, my leg cramp. Wait, both Hong Kong and Singapore are expecting the virtual banks to take their virtual banking value proposition to the population outside of the city. So the Greater Bay Area, which has a population of 68 million for Hong Kong banks, and the ASEAN market for Singapore banks, while retaining Singapore and Hong Kong as their headquarters as required. So the fundamental difference between Singapore and Hong Kong is not just a matter of numbers, but it is also about the amount of capital, which I mentioned previously, and the extent of control, the overall economic objectives, and the primary concerns of the banking regulators that mandates the need for more players. Now let us discuss what are the short and long-term impacts of the financial services industry. For short-term impact, we can actually see a trend where there will be an increase in adoption rate for attractive digital banking products and services, and more importantly, a more personalized service. Thus, such FinTech innovation will be promoted in our local financial service sector. And in terms of job opportunities, and as I said previously, we may see more job opportunities being provided in the digital banking sector. And in the long run, we can actually see that the digital banking has the effect of long-term profitability and having the capacity to create a sustainable competitive advantage. Digital banks that adopt FinTech will offer benefits in terms of enhanced cost efficiencies, better product qualities, and increased value to the customers. But the economic rents and value realized from these benefits will not last long due to the high imitability of FinTech innovation. Another word it will be like such innovation can be copied easily. Thus, financial technologies adopted by the digital bank have the status of strategic necessities, and advantages from their early adoptions and use are lost through imitations and do not lead to profitability increase. So it is important for Singapore digital bank sector to stay innovative with an agile experimental mindset in order to stay relevant and competitive, or else we will lose out to Hong Kong. Lastly, let's talk about the value destructive competition. MAS has mentioned in their criteria that they will not allow any bank, digital or not, to engage in value destructive competition. So this word very chin lah, but so what is the meaning of value destructive competition? Okay, let's break that down. Value refers to reputation, inherent quality of products, not easily measured. It could be specialized services process that create growth. So in short, value destructive solutions refers to banks offers throat-cutting products or services for the purpose of gaining market share, or what I would say 卑鄙手段. So why is it so harmful for the financial service sector in Singapore when a financial institution uses value destructive competition to gain market dominance? Firstly, a digital bank may create an unsustainable product, maybe something like mortgage-backed securities back in 2008 during the financial crisis. Every bank will follow suit due to FOMO, fear of missing out, and all of them want to get a share of that pie. But when everything is out of control, and when shit hit the fan, and everybody will kena the shit, and that's include that the shit also kena MAS also. So followed by banks setting the rate too low, which is out of the equilibrium. This will force the equilibrium rate to fall, and smaller banks will definitely suffer due to the small digital banks operating in an environment of thin margin and high cost. Oh my god, I damn dumb. A few more hours before submission and I forgot to do conclusion. Okay, to conclude, right, a digital banking model is necessary for the banks as it will ensure the soundness of Singapore's banking system and ensuring that the digital banks are not taking too much risk in order to gain high returns. And for Hong Kong versus Singapore, it is best for Singapore to stay innovative with an agile experimental mindset to stay competitive as technologies can be replicated easily. Lastly, although value destructive competition may not be the only factor that caused the bank to shut down, but still, it is a factor that we have to look into as we don't want new baby digital banks to 乱 来and destroy the whole financial sector. This is the end of my video and thanks for watching.